Over the last few days, we've seen Cardano's price action move up around 8%, right up into the equilibrium area on the charts. In this video, we're going to be jumping down into the daily price action for Cardano's ADA and what I think is likely to occur next. Now, as I get into this video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into this video, though. We'll keep it nice and brief and to the point. I'm giving you all the information that I think is important that you need to know about for the price action of ADA. But at this point in the video, it's probably worth noting that I'm not a financial advisor. I cannot give you financial advice. All I can do is share my thoughts and opinions on what I think is going on here for the price action of Cardano's ADA. So let's go ahead and jump into this, right? We have a bit of Elliott wave stuff going on. We'll probably start here. Then we'll move over into the smart money concepts and then take a look at the weeklies and find out what's going on here for Cardano as well. We'll just go ahead and turn that over to Cardano. So let's go ahead and start with the Elliott wave theory side of things. Okay, so we're looking for this three-wave corrective action. We were talking about a move down to 32 to 34 cent, and this recent move to the upside hasn't really distracted us from this move to the downside. If anything, it's going to actually enhance our abilities to predict where that's likely to go next. So for example, here on this daily time frame, we can see that we're just up in that overbought range. We can see that this daily time frame shows us with a three-wave corrective pattern, and it's gone up to exactly to the 1-to-1 ratio. This isn't anything unusual or uncommon. This is pretty much typically what you would expect of a three-wave pattern. Okay, it goes basically up to the 1 Fibonacci level or the 1.236 Fibonacci level. So it is possible that we still have a little bit of room to the upside here, okay, specifically right in this little range, okay, so we can see it between 38.64 and 39.45, okay, so that's the C wave. At the moment, it's got rejected on the 1-to-1, so it's the minimum expectation of kind of what you would expect to see has been to be achieved, right? So although it is technically possible that we push up a little bit higher, we have to kind of acknowledge the fact that we've been rejected on this range already, which happens to coincide with the resistance lines actually all the way across here. If I go ahead and throw it on, you can see this white line here. This one's basically finding that we hadn't closed below this level for a period. We lost it, and all you're doing now is testing this level, okay? And you're basically finding upper resistance. So what was previously support is now turning to resistance, okay? So that's kind of what you're looking at. This is basically 38.64. I actually have this marked out on the line as 38.67, but it's right in that sweet spot there, you can see. Now, the current high on our daily time frame is 38.63, so you can see it's coming right in line with our expectations. Okay, so let's remove that. We'll also remove this line here. So if we've completed this move to the upside and we kind of finish that range, what does that mean? Well, it means that we need to acknowledge the fact that we might find ourselves in an A, B, C structure into this move to the downside on a slightly larger scale, which obviously builds into this one here as well, okay? So let's note into kind of what that looks like. So if we have bounced up, how high have we bounced? Well, we've bounced up just above that 50% level, and you'll notice that we've barely closed above it. You can see it right in here, the 50% fib level there, and we've barely been able to kind of close above it. We're kind of finding the upper resistances. Now, it looks like the 50 EMA might be brief support, so we'll keep a close eye on that, and our 200 EMA is right inside our yellow box. So again, looking for rejection within that range. Now, if I take the existing high, bearing in mind we may still push up a little bit higher, but I'll take that existing high because this will give us a more bearish outlook. It would show us with a potential move into this range just here, okay? So this would be 30.75 to 32.13, and that would be our C wave structure there. Now, it's worth noting that on that particular area, if I go ahead and remove that off, that we want to kind of take stock of the bigger C wave structure as well, right? Where does that currently show us with the potential to the downside? And so let me go ahead and bring that up here. We'll move the fibs over to where we bounced, which is our B wave, and you can see that that would actually bring us down lower than the 1.382. This essentially would move us away from an ABC structure and more in line with a WXYXZ structure. Or more specifically, I guess we really want to be thinking at this point about double zigzag patterns, so more WXY or WXYX and Z. Okay, so there's a few things to kind of consider within here, because if we do go down lower than the 1.236, it's above and beyond beyond what you would normally expect of a C wave structure here. It's not normally what you'd expect to see. So what we'd do in that particular scenario is I would say that we have our C wave here, okay, the ABC structure, the zigzag. We have our corrective pattern coming up here, and then maybe this low range down here isn't what we're looking at initially. Maybe we're just looking for another zigzag pattern that will marry up with our first kind of zigzag, and in that case we will be looking even worse on the bearish side of things. So let me go ahead and show you what this would look like. So let me go ahead and just put the fibs on for the entire ABC structure. We have our bounce, so let's take it to the existing high, although it can push up higher, and it can push all the way up to 46.17 without breaking this structure, so just be a little bit aware of that. But here we can see a move down to 29.14 to 27.27. So that puts us in a lot more of a bearish situation to kind of think about this move being of significance to the downside. That would be our double zigzag pattern, okay? And basically you'd have an ABC here. We'd have more of a WXY going up here or something to that effect, and then another zigzag pattern coming down into this range, bringing us down in towards that 27 to 29 cent. Now, if you do that, then of course you can wrap that up as a bigger kind of WXY structure. Let me show you. Okay, so that there would be a W, X, and Y. So you end up with that corrective pattern kind of bringing us down a little bit. Okay, so there's a few things here we have to consider, and all of this is really stemming from that recent move to the upside not really being where it needs to be. Okay, and what I mean by this is that we've got a very overlappy corrective structure that doesn't show us with a move to the upside of significance, and that becomes a problem because we would like to see a more significant move to the upside, and we just can't seem to find the structure that's going to allow us to go there, not without first correcting down. So all eyes have to be on what happens next. Do we go down lower than 34.85 cent? If we do, then we're going to be looking, in my opinion, to be counting a zigzag pattern potentially down towards 27 cent. But there are a few other areas here that we can also consider as options. Okay, and I'm going to leave all of these as options here. In fact, I might just bring those out just a fraction. But we want to know exactly which one lands on it. So we need to see the internal counts, right? If we start seeing, some kind of 5-wave count coming down here, then all of a sudden I'm thinking 27 to 29 is highly probable. Okay, we would bounce up, of course, because we can't just go down in straight lines, and then we would move down into that kind of final wave structure there, and then that kind of completes your WXY pattern. And of course you can bounce up and have another zigzag as well, taking us down even deeper if it needed to. So for the most part, what happens here is going to be critically important if we lose 34.85. Now of course that if we lose it in a 5-wave pattern. If we come down and, we just find it as an overlapping structure, it looks like an ending structure of some kind, then of course we're going to be talking 32 to 34, and maybe if it really wants to, 30 to 32. But for the most part, it will be pretty relaxed at that point. It will be pretty comfortable kind of areas for Cardano's ADA. But for the most part, considering Bitcoin's pushed up towards 28K, we haven't really seen ADA here really kind of move up of significance, or any move of significance to the upside. So for now, considering overbought on this daily time frame, we want to be a little bit cautious with that. Moving over into smart money, what do we see? Well, we still see that we're in a slightly bullish structure. So we can see that right there. And we can come all the way down into those low ranges. It's not a problem. But the second that we do come down into the fair value gaps that were left behind, again, we're talking 27 cent, right, up to 29 cent. That's a fair value gap, and we can see that with an Elliott wave theory as well. And there's also this low at 25 to 26. So we have to kind of consider that although our structure is slightly bullish at the moment, if we were to come down lower than the local low at the moment, then that is going to change into a bearish structure. And yeah, that is what that is. We can see that we are getting rejected on equilibrium here, and we're sandwiched between a 50 and 200 EMA. We also see this red block. This is an internal sell order block, so we know that there's a lot of selling pressure right up in this range as well. So again, we're not expecting to kind of go above that 200 EMA, and if we do, I'm not expecting it to be too much long-lived. Like I said, it's still technically possible that we move up towards that week high at around 46 cent. I just wouldn't expect that to happen right away. And if we do go higher than 42.13, my expectation would be that we get a break of structure in this range, and that will concrete that we are in a bullish market here, at least on the kind of the daily time frame, for a move and a consistent move to the upside. And that would be a pretty interesting thing to kind of see unfold. But for the most part, we can see all these good kind of buying ranges down here. And we can see, of course, those ranges of selling up here. So if we really break that down, what have we got as our options? Well, we've kind of got ourselves trading right in this little range, and until one of the bulls or the bears kind of take control of the situation, we'll either go down or we'll go up, right? Not overly helpful on the smart money concept side of things at the moment. Anyway, theory says our next move is down, so I imagine that the bears are going to take control of the situation. We'll have to see whether we can chew through all of these buy orders as well. There's a fair few of them there, so we'll have to keep a close eye on that. Moving over into our larger macro view, we can see that we have had on our weekly time frame the 50 EMA dropping down lower than the 200 EMA. That's a bearish indication. It basically shows us with short-term price action being lower than long-term price action, so it's given the bulls a little bit more to kind of go on there. Again, we're not oversold, we're not overbought on the stochastic side of things, so I'm not too concerned with that. We'll just tech divergence. We had the bearish hidden bearish divergence before, nothing flagging up here on the weekly at the moment, so all that's good. The RSI is at the mid-level, not indicative of either direction, can go and flow in multiple different routes at this point. We can see here that we are going up into higher highs on the chart as well as the RSI. So again, there's nothing divergence-wise going on there. Small pullback here, but again, we can see overall that there's still some room in our RSI. If we go ahead and throw this on, you can see that we kind of had a bit of a trend where we were kind of just lowering our RSI. This is going all the way back to February 2021. We obviously did push up into new higher highs whilst simultaneously lowering the RSI, right? So showing a weakness in strength, even though we were pushing higher in the price chart. Where we are at the moment, we're not showing terribly too much. I would say that if anything, we're starting to see some weakness, but we'll have to see whether or not that's going to kind of materialize over the next kind of few months or so. Ultimately, though, I am bullish on ADA long term. I think there's going to be some fantastic price appreciation in the future. I'm just not confident right now that this is the moment for ADA to have a run. So it'll be interesting to see how things do unfold in the slightly longer term, months and years down the line. But I do think that Cardano ADA is definitely going to be one of the ones that will perform incredibly well. And this is from understanding the technology, not just from speculative investment. Ultimately, it did incredibly well. It outperformed many assets in 2021. I think it will outperform many assets going further forward as well. There will be some that will perform better. There will be some that will perform worse. This is kind of a given, considering everything that is going on in the real world and various different use cases and new use cases that are emerging every single day. But I think long term, Cardano ADA is going to be in a really strong position, considering everything that's being built. With over 1,200 dApps currently being built on the ecosystem, the 𝗕𝗘 stablecoin, the DeFi that's going to kind of start booming, the total value locked. I think ultimately we're going to be in a really strong position. So yeah, I think the future is bright for Cardano ADA. Let me know what your thoughts are in the comments down below. I'm going to leave the video right there. If you did find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and guys, I'll catch you all in the next one. We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.